The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Monday, the 23rd of June, and we're looking at the Dow up 180 at 42,388. So let me go through everything step by step as I see it. So within the context of what we were looking at earlier on, now this is, of course, before the Iran bombing. So I was looking at this chart, and the chart that I've used for years and years and years. I call it the Chapman Wave Dark News Index. I used to call it the Dark News Cloud Cover because it's really this dark news that envelops the market, and therefore the market starts to go down. Could be high interest rates, could be just a number of factors. But for a while, it hasn't been interest rates. But I had said when we looked at this chart back here around about the 19th of May, I said, I think we're getting close to an internal high. And maybe we need to see a pullback, and then one of these patterns that has like a cup formation or a V-shaped formation with a retest, and like an earthquake that has an internal, it has the earthquake and then it has the aftershock. I consider internal high and residual high as the same thing, or an internal low and a residual low is the same thing. In other words, you get the earthquake and then you get the aftershock. Well, in this particular instance, we had all the negative action that the market, in a sense, was ignoring, but then all of a sudden took on quite a reality. So we actually went short. The day of the high was the most recent high, not all-time high, was on the 11th of June at 43,115, and then we had gone short. And then you got that huge pullback, and we've been under that. But look, that green 9-period moving average would have turned pink today if it was still very negative like last night, as it did with the YM, the futures. But it's holding well. And what I'd say is I think we're stuck kind of in a rectangle formation, and I call it a digestive phase. Let's get out of this now. We can go to all the numbers. So the digestive phase says that if there is a pullback, there's tremendous support to the 200-period exponential moving average, which is at 41,772. We're trading about 700 points above that at 42,386. We still have that short position. I'm watching this very closely because there are a number of factors that are really important, and I'm going to get to them step by step. So the number one is that the weekly chart is still very positive for the Dow, and the monthly chart is still very positive. Look at the S&P. It's the same thing. So we have a short position in the S&P, and we've taken a little bit off right as we speak this very moment for a little bit of a gain, and we've got a very tight stop, and we'll see if that's going to be taken out. Why? Because with this red candle on Friday, you can see that who knew about the bombing, right? So just looking at the overbought situation in so many of our key stocks, and I put in that category General Electric, Robinhood. There are a number of those. So Cintas, just a number. CTAS is a symbol. It just, and URI, that's the, URI is the United Rentals. It just said to me that over the course of this week, going into maybe next week, we should see some digestive phase. I don't have any indication. Just have a look at this chart here. That's the daily is still green with the 9-period moving average still way over the, not way, but it's still nicely over the 14, the black 14-period moving average. And look at this weekly chart. The weekly chart has a price that's way over the 9-period moving average. The 9 is way over the 14. The MACD is still strong. The stochastic's at 93%. It's just the on-balance volume that is weak. So far, this is still very positive. And look at the monthly chart, almost like a V-shaped pattern. That is very strong. Now let's go to the QQQ. We'll go one at a time because it's the beginning of the week, and it's really important to see how we could close on Friday. So in the QQQ, this could be a peak C1. Let me just type that in. It acts like a peak D, C1. And very next 2 bars later is a C2. Oops, capital always on the way up. C. Right there. And then I'll put a little plus sign on to indicate that it acts like a phantom peak. It isn't a peak D, but it acts like a D sometimes. But as long as it holds steady, it means you can still pop to a real D. We saw that in the E-mini just a little while ago. I put in a phantom peak here, that peak A, B, C, thinking that if that was the D, I want to be ready for it, but they've got a real D and an E, and now we're pulling back. And a leg D, probably a peak D in the 5-minute chart, only a leg C in the 10-minute chart. So let's get back to our story here. And it says, holding nicely in the QQQ, IWM, the Russell 2000, also up $1 at 210.18. 9-period moving average was really close to turning down, but it never did. And here's the other thing. The weekly chart last week on Friday saw the 9-period moving average cross positive, and this week so far is holding positive. And the monthly chart is good. It's not great, but it's okay. Now let's go to the SMHs because they're very important. SMHs up $1.90 right now, 94 at 262.23. Also stuck in this little range here after a peak D. Nothing really negative, and this V-shaped pattern of 269.66 as the high back in early 2025. All of a sudden, we come right back and we go to 264.91. Now, I can't remember if I updated that. 264. Yep, I did. 265.53. So I didn't update it to that day. I did to the other days. 65. All right, so the 265 is under the 264, 265. Okay, now this is going to be very important because look at the weekly chart in the SMHs, 269.66. We go to the 265s, 9-period moving average is still holding very nicely. So all of this says to me the reason why I didn't want to go short any stocks, but rather take a little bit off as they were moving up some of our positions that have been really good gains, and go for the indices because I wanted generic right now, because if there was going to be a pullback, my thinking was that it would be better to have the Dow and the S&P because you can control it to a certain degree. Of course, who knew that you could control it to the extent that over the weekend you were just sitting there with absolutely unable to do anything because you had the whole of Saturday, the whole of Sunday, and you had to wait for Sunday night. And then Sunday night opens. Look at this. Here's the YM. Sunday night opens. Look at this. We go on Friday with a low of 42,088, and the low last night was 42,096. I mean, you just don't get much closer than that. And here we are at 42,710. So we've got a move, just a little bit of a move of 42,090. I would say a move of about 650 points. That's a pretty decent move, right? But look, the action still says that the 9-period moving average, which is in the futures, is still pink. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I look at three core patterns: straight up, straight down, arch formation, cup formation. And this one here is red because if it goes to a peak A or a B and then it fails and it comes down, takes out decisively the left side low, that means that you go 1-to-1 to the downside. But if within 2 bars, sometimes I say you can make it 3, but I prefer if it's 2, it closes above the left side low. That's really important. Well, what do we have here in Bitcoin? Bitcoin is down 1,085 or 102,335. It came from the 113,060 level straight down. Then it bounced, failed at the peak A, rallies, turns down, then has another little A, and that fails, and another little A, and that fails. And then what does it do? It takes out this left side low, but whoa, look at that. It's come right back from the low today of 99,090. Remember last week we were looking at, I said somewhere around the 99 to 97,000 area is where it needs to hold. Otherwise, I think it's going to go quite a bit lower. Well, that still pertains to this particular chart pattern, but so far it is a nice bounce. But we're going to be watching this. I should mention we are long. We're long the Bitcoin. Really basically through the iBit, which is the iShares, and that's trading down 51 cents at 58.60. Same pattern, took out the left side low, gone to a leg D, but so far it looks like it wants to close above that left side low, and that's going to be important. So we are long, you can see all the way down from here. That was down in the 30 area. And what's really important about this is that within the context of rotating through the financials, you're looking at a situation. So yeah, we're long under 40, and it's trading right now at 58. It hit 68.30. Treat this as if it's a financial in its own context. You know, let's look at the dollar. The dollar right now is trading. It was trading up quite a bit. Now it's up 32 ticks at 99.09. It went to a leg B. The 9-period moving average is trying to turn green. It's going to take quite a bit. It's going to take a move to the probably 99.90 to 100. 38.23 area to get that to turn green. MACD's improved. The relative strength has improved. Stochastics improved, but still very weak at 53%. The monthly chart has its potential double bottom bounce. We'll see what happens. Look at the EUR-USD. This is a euro-dollar currency pair. It went to a peak. G has pulled back quite some today. It's up a little bit. It's at 1.152. If you look at the USD JPY, which usually trades in the direction of the dollar, but is actually been quite independent of the dollar for quite some time, had a big move up. It's trading up 57 cents at 146.70, but it happens to be leg D. It failed to break to the 200-period moving average, which is at 148.39. The high today is 148.02. And the weekly chart will start leg B if it can get to 144.655. And right now, what we're looking at is it's improved a lot, got the second cup formation, but the pullback says that it better hold 145 support. Otherwise, that's going to be a problem. So that's the currencies. Other thing I want you to look at was the bonds. Looking at the bonds right now, you can see the bonds are rounding some. They're up 23, 30 seconds. If you look at the TLT, it's a little bit closer to making a leg E. That's going to be quite important, E/B. So this would be 87.28 on the 12th, 87.28, and today's high is 87.28. You need one more penny, and then the TLT breaks to the upside. Let's see if the TBT breaks to the downside. Yeah, look at that. So the TBT, which is this is the yields trading right now at 36.14, 3.614, and that's the ultra short Lehman 20 T-bond ETF. Almost arching over. If the TLT at any point this week goes to 35.84, there's a good chance, I'd say, closes below 38. Yeah, no, that's not even 38. Let me just do that again. 35. Yeah, 35.74. If it closes under that, then the 35.14 200-period exponential moving average will become a magnet. All right, so we've done a bunch of things. Now, let me look at my notes here. So a stock that I followed for a long, long time, and we kept wanting to get in. We did get in a long time, just really a long time ago. It was in the single digits, and we got out. I can't remember. We made a little, lost a little, but we got out and just followed it after that. And I've been watching certain stocks that have been on a tear, and then one by one they've been really just suddenly, boom, they take a dive. Well, look at this. This is Hims. This is Hims and Hers. I was talking about this the other day, and I said, hey, wait a minute. When you go very quick, in this particular pattern, when you go very quickly from a peak A, 1 bar rest, this is the daily chart, then leg B, 1 bar rest, leg C, 1 bar rest, leg D, 1 bar rest, and then you go to, and that was on Friday, I said, you've extended this leg E. Invariably, you get a very sharp pullback. It doesn't mean to say it's a major sell signal or anything like that, but you got to be careful because that kind of speed in the Chapman wave methodology to go so quickly from a trough that starts peak A and then B, C, D, E. It's so unusual. This whole pattern I said was just so unusual that I'd be a little careful. Well, I didn't mean to say a little careful. I meant to say there could be some kind of a pullback, but I have no idea where it would go to. But the signal doesn't say yet that it could be a major sell-off. Well, the signal today says it was a major sell-off, 30% down. HIMS is a symbol, trading at 44.58, down 19.65. And I didn't realize it, but in the den, who was it that gave us some information here? Thank you for that information. Fletch. Yeah. So NVO cuts ties with Hims over compounding violations. Oh, Novo Nordisk. See what they're doing, NVO. I don't know how it will help them because they're just not doing anything there. Oh, it didn't help them at all. They're also down sharply. So this became A, B, another little A, and then that becomes C, D, E, F, G. Okay. So you've got C, Novo Nordisk, NVO is a symbol, trading at 70.00, a round number, minus 377, down 5%, E, F, G. 1, 2, 3. That was an instant restart, which says that you could go to D, where you've got to reassess everything. Well, lo and behold, that's where it turned down, and it's trading down sharply. So that's very interesting. So they're both down. So I always look at this, that if there's any legality in a stock, if the company suddenly is faced with anything that has to do with legal, the amount of paperwork, the amount of time, the amount of money that is expended just trying to resolve it, or just getting papers ready for the court cases or whatever it is immense. So I would avoid this stock at this particular point, at least for the moment, until there's some clarity, and I have to put a down arrow right there. So HIMS, 200-period moving average is at 38. Nope, sorry, 36. Tomorrow I get my eyes tested. 36. We'll see what happens after this. Dow's up 163, S&P's up 34. Basil, Chapman, Tiger Technicians Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
I go through back. Dow's up 140. S&P's up 39. So a couple of questions came in. Well, first of all, let me look down at my notes, because I always forget to look at my notes. I did that. I want to look at, I did that as well. So a couple of questions came across. I haven't even looked at it. I'm going to do that right now. What was it? Could you look at the FXI again? FXI. FXI is up 38 cents at 35.91. iShares China Large Cap ETF. Remember, I've been looking at this and saying, if I'm correct in this particular pattern that I utilize for a long, long time, it's called the Chapman Wave Unconventional Flat Base Restart, and that says to 34s. It says that the FXI, iShares China Large Cap ETF, trading at 35.90, up 38 cents, should target the 34s by the 27th of this month. 27th, that's not very far. It's just 3-4 days' time. Anyway, so that's what I had if this particular technique is going to work. Now, if there wasn't, you can do this if there was and if there wasn't. But let's just imagine that there wasn't the conflagration there wasn't much of a conflagration. It was just an attack on the nuclear facilities, those 3 core facilities. My contention has been that the market is in this rotational correction, and that some stocks like a W, which is Wayfair, was trading very well, doing very nicely, maybe ready for a little bit of a consolidation as it's hit all the targets that we had, even though we don't actually have it, but I had done all the homework on it. And it's one of those comeback kids. The monthly chart says, are you kidding? The weekly chart says, maybe. The daily chart looks fantastic, going from 20 and doubling, more than doubling, to 49.40 right now. But that's what I've been looking at, that there's some kind of a rotation going on, and that even the semiconductors, which have had a pretty decent rally, are starting to stall a little bit here. So this doesn't change too much from what I'm looking at, in the sense that, yes, there has been something that's taken off the table. Other things might be back on the table, and we don't know that, because if you're looking at crude oil, this is something that they still have. And the Straits of Hormuz, all you have to have is just a little bit of friction out there, and you've got a problem, the Straits of Hormuz. But crude oil is down 77 cents at almost the low of the day, down at 73.11. And that's just saying to me, maybe not, because I'm not sure that they want to risk the economy to the extent that it would be impacted if they really continue to not at least talk a little bit of peace, right? So that just says to me, so the question came in, the statement came in and said, where was it? I'm thinking, this is the Peaking of the Dead, says, I'm thinking energy is going to be the place to be for the second half. XLE and RIG and the whole complex, natural gas. So let's just do this. So for subscribers, we did enter a oil and LNG and natural gas shipper today. And it was, in a sense, it was against what I was thinking, that because Iran really can't afford to, they can talk tough, but they shouldn't be acting tough right now, that oil probably is going to come down. But you don't know. You just don't know. So that's a question that I think you can throw out there. Will energy as the XLE, just the first hour and a little bit of the first week of trading. After that, why did I lose all that information? I don't even know how it happened. Peak A, B, C, D, E. Peak A, B, C1, C2. Yeah, okay, so the XLE right now is down 88 cents at 88.11. This is the S&P Select Energy ETF. The way it's holding, with a 9-period moving average so strong and the 200-period moving at 87.30, And the weekly chart, 9-period moving average, this week has just flipped to positive. I think that you have something there in terms of an idea. To put the idea into practice, I need to give it a full week. Let's give it this full week till Friday and see if the XLE is trading above 91.70. It's at 88 right now, or if it's trading under 86. Just those are the two levels I'd be watching. It's a good question. I just don't think we can answer it right now. If you're looking at NAT, which is Nordic American Natural Gas, Nordic American Tankers, NAT is a symbol, trading at $2.80, up 6 cents. Yeah, it's acted very well so far. Does it continue? Well, there's another clue. If it's able to go from 280 right now and close on a weekly basis above 293, I think you've got something there. So just look at the numbers that the numbers tell you. At this particular point, all I'm saying is that we did enter a position in one of the tankers, and I'm giving it a little bit of leeway, a little more than I would normally want. It's already at a really big percentage gain, but given that most of that back, it's only more a trial than anything else, and we'll see what happens. Next question came in, and Basil, what level in the SPY upside would give you confidence the consolidation is over? That is a question that has the same as the XLE. It has the same, in fact, the same as crude oil. Crude oil going above 82, even just one close above 82, will say, it's in play, because look what happens to the 200-period exponent. Look what happens to the Chapman wave inside track, repellent, propellant zone. We're right on the baseline right now. So if it goes higher, so that would be the same thing with the SPY. If the SPY trading at 597.44 right now is able to close, it can't just tag it once. It has to close above the high of the 11th of June, which is 605.06, closing at 605.26, a little bit above it, says to me, you know what? We're going to tag that last high, that major high that was on February, the week of the 21st, of 613.23. I'm just trying to keep it as simple as possible. If at any point, and I think today might see it, if we start to head down at this particular point, that's going to say that the resolution to what happened over the weekend, going into Sunday night's action, very positive turnaround into today, says, there is still a question mark. My thinking is that there's going to still be a question mark. So work hard, play hard in the Tiger YouTube. My answer is those are the parameters, that if the S&P closes sharply below Friday's low, then I think we just continue lower. Not deep, but lower.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks, we're back. So let's look at this. Wendy's in the den. In Tiger YouTube. Jeff says, look at WEN. Yeah, this is a huge move. Wendy's trading up 45 cents at 12.46. And had a very strong day on Friday, and a continuation pattern to the upside today. That's very good action, and it's taken out some of the left side resistance levels. How it deals with between, let's go. So this is 12.52. Today's high is 12.48. How it deals with 12.52 is the first real resistance, but if at any point in June it closes above 13.06, that's the high of the 2nd of May, that not only will that be a breakout, but the move in percentage terms from the low of the 16th, which is at $10.91, 25-30% incline would be very positive. The weekly chart needs a ton of work. I don't have to talk about the monthly, which is just horrible. But this is the way you start a really good move and at least see follow through. Is this being seen by, say, a Coca-Cola? Coca-Cola is up a little bit today. It's up 76 cents at 69.60 at a very sharp pullback. Let's go to Pepsi. Nothing. Down, looks terrible. Let's look at CMG. Of course, I've got my notation, no notation. I don't know what happened. It must have happened one day. It just all, it must have shut down and I couldn't save it. And now it's gone to a different part of the library. That's all. It's easy enough. I just look, peek A, B, B. Oh, I remember this very well now with Chipotle. 42.80 and 42.88. I used, now I recall. So that becomes A, B, C, D, and that's an A. Under it, it's got an A. Yeah, I had to use that as a phantom peak. So Chipotle is acting pretty well. Very nicely at the 200 period moving average. So we might be seeing within the restaurant area, within the food industry, something happening here that says, this is what I want you to do. We'll confirm it now. Look, corn looks terrible, horrible, down 8 1/4 at 420.5. I had this as a left side, right side price time match. I have to change that, but it seems to me that, oh, yeah. All right, so corn's out of the question here in terms of the positives. Wheat, thus wheat, had a really nice move up to a peak C. Look at this, sharply down. And soybeans also sharply, oh my. So those are the grains. So the DB Agricultural Fund, which we're still long from the 13s, is trading at 26.53. Sitting on the 200-period moving average. Yeah, I'm a little surprised. Okay, so maybe the grains are coming down, and that's really helped. Let's look at GIS, which is General Mills. General Mills, they have Cheerios, Haagen-Dazs, having a little bit of a bounce up, 40 cents at 53.30. Now it's very selective. This could be a double bottom, but I'm watching it closely. Good point. Okay, so what did you say? You said I'm watching very short opportunities in both. Nope. Yeah. Did I miss it? McDonald's. Okay, I can't find it right now, but yes. So have a look at. So these are the things that are on my list. So I did this yesterday. So I'm going through many of the charts because I'm looking at ARKK. That is Kathy Wood. Finally, she's got her say, and she's doing very well. Wow, she had to wait a huge decline, and now she's in the sweet spot. So she has Circle Internet Group, CRCL. I looked at the list, the entire list. Where did I put the list? Doesn't matter where I put the list. Had the list, put the list, haven't got the list. There is no list. All right, doesn't matter. So Circle was one of them. And Circle Internet Group, CRCL, and I put this in yesterday, had made a peak C, and today, look at this. You actually would have got it from the close on Friday to a little bit of a dip this morning to 232.48, and here is a 278.12. It is up 35, almost 36. No, it's now $36, up 15%. If you look at CRWB, this is core beef. Also, very nice action. But this one's stalling down 367, 179.91. So Kathy Wood, I've spoken about her for many years. I said if she was anybody, she must own the company, because if she was employed by somebody, having gone, and yes, she looks at 5 years, big deal, 5 years. You buy it in November of 2021 at 125.86. And in December of 2022, it's at 29.43. That's a problem. But I said all the time that I think it's going to come into its own. We did not get into it. I've spoken about it. And here it is, up $1.57. ARKK is a symbol. ARK Innovation ETF. It's at 69.30, up $1.57. Very nice action. And that's what I meant when I said I think that we get a rotation coming up, with some of the biggies taking a breather, but at the same time, I think there are some areas that are going to hold pretty darn well, and we'll see if this is going to be one of them. So with that said, there are a couple of Robinhood Markets shares, Finance Frontier, ordinary shares. I'm not sure what that said. So Palantir, I'll look at that. PLTR is trading up $4.61, done very well. Yeah, it's been on our list as a buy, which we haven't got. We've got some others that have done very, very well. But you know what? This has walked the 9-period moving average, gave us a fantastic opportunity on that big sell-off on the 5th, going down to 118.93. The next day, it gaps up a little bit, and that was the buy. And now, is it too late? Palantir Technologies Inc. develops the data fusion platforms. You know that well, you don't really know, but it seems from everything I can read that the government kind of favors Palantir at this particular point, and it's looking fantastic. Look at that monthly chart. Look at the weekly chart. Yeah. So where's the support? The support's between, it's at 141 right now, 141. I say the support very short term is between 138.60 to 137.20. If it closes under 135, it's going to go into a bit of a consolidation. Okay, so let me just do this before we run out of time. Question came in, 3 questions, so let me just get to this one. There it is. Okay, Basil. Is it time to buy the housing stocks? Because today a second Fed governor came out saying that they think we should take a chance on lowering interest rates, and that's why the market bumped up a bit this morning. Do you think the moment interest rates are lowered, you will see a boom in the housing stocks just as a knee-jerk reaction? Would you be buying an ETF? I pondered this question over the weekend. The HGX index, I'll be back to talk about it. The Dow is up 81, the S&P is up 27, and the HGX index is up 3. That's the housing.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, Bob. So the question about whether it's time to get into some kind of ETF or one of the building stocks. Look, Toll Brothers is one of the really good companies. The chart pattern in the daily chart is good. The weekly chart is okay. The monthly chart is not very good at all. I'm going to suggest I would rather hold off. I wouldn't want. This is not one of those times where I want to be the first in line to say, this is it. We're going up. I think there's a lot of shakiness out there right now. I wanted to talk about it, maybe I'll do it tomorrow, about all the incredible skyscrapers that are going on. World's tallest residential skyscraper, Siena Tower in Brazil. It just goes on and on and on. In the United States, they're building the tallest residential building. So the whole thing that I've had with skyscrapers going all the way back to the 1970s, 80s, That's still in place. I still think we will get talk about the world's tallest buildings, etc., when we make the major top. I don't see the Toll Brothers. I would do this. Nibble on Toll Brothers right now or wait. I would prefer to wait. Let's go through it again. Let's see if it's even up a little more tomorrow. But that would be the one. I don't know yet about an ETF and that. I'd rather go for the best of the best. And so far, it's not a great chart, but it is one of the best. So let me just do this before we wrap up. We are still holding our short positions. That's in the indices, not so much stocks, because the stocks are rotating all over the show. But I'm going to say that if the Dow, which is trading at 42,261, at any point this week, if it closes under 42,000, that's just a hint to say that this consolidation I've been talking about is unfolding regardless of what's going on in Iran. And as far as crude oil is concerned, it would not surprise me, it's down 95 cents at 72.90, that if out of the blue we get a little bit of a spike in crude oil, just to say, hey, don't ignore me, I'm still a weapon out there. I've got the Straits of, we've got a lot of things going on that could, in fact, impact the crude oil. So I'm being cautious here. The only thing we added today was a